Hi everyone, it's Fiona from Nadaya Financial and it's Mortgage Monday. Today I'm going to discuss the importance of having your home loan reviewed every 1 to 3 years. I'd say on average every 2 years have your home loan reviewed just to make sure you have the best rate on the market and your mortgage and the way you're doing your finances are actually working for you. So there are a few points that I'm going to discuss today. Now, before I get into it, we all know that the cash rate is lower than it's ever been. So the interest rates are really competitive right now. So that's why it's important for each and every one of you to know what your current interest rate is on your home loan. If you don't know, go and find out because that's an important piece of information that you all need to know. So a few things that you need to consider why reviewing your loan is so great. First of all, did you know that from July 2011, the fees to leave your bank were abolished? So the only fees that you should be paying when you refinance out of your current mortgage are the discharge fees, which are approximately $400, and the government fees. The next thing we're going to talk about are fixed rates, and that's another fee that you may be charged. Now, if you're in a fixed rate loan and it's been a couple of years and you just found out that your fixed interest rate is actually pretty high, then call the bank and find out what your break fee would be to come out of that fixed rate. You know, I had a client a few years ago who it cost him $12,000 break fee to come out of his fixed rate loan. However, in doing so, it saved him $35,000 because he was only halfway through a 10-year fixed rate and it was the best way to go for him. So my point is, when you call the bank and you find out what your fixed rate break fee is, then get in touch with your broker and let your broker know what that amount will be, and they can work out the calculations for you and tell you whether or not it would be worth it for you to stay with your current bank or to go to another bank because there will be savings. Because there's no point refinancing if it's not going to put you in a better financial position. Lastly, think of the savings. Now, you know, if you paid an extra $50 a week towards a $400,000 mortgage, you would shave 5 years off your mortgage, which is amazing. And in turn, in doing so, you'll be saving probably about $48,000 in interest because you've cut 5 years off your mortgage, which is a huge amount. So when I've refinanced with some clients in the past, this is what they've chosen to do. So say that you have just refinanced to a new bank and your interest rate is less. Some of my clients are comfortable with what the repayment amount was, so they continue to pay the same amount each week, and which is actually going to be more than what they need to pay, but they continue to pay it because they know that paying more will cut years off their mortgage, and that's the reason that they like to do it. So if you're refinancing, if you choose to keep the rate the way it is, you'll be saving money, cut years off your home loan, or if you just want more money to spend, again, that's another reason you can refinance. So it's important to have your home loan reviewed. The break fees aren't as much as they used to be. If you're in a fixed rate loan, find out what the break fee would be and speak to your broker to see which is the way to go for you personally. And lastly, it could shave years off your mortgage just by paying an extra $50 to $100 a week towards your mortgage. So if you'd like any further information on what I've discussed today, feel free to leave a message below and have a great day.